Turning to a smaller cap name here, best idea short, Helen of Troy had earnings this morning. We had our black book reiterating the thesis around the building risk for the business last week, right? Which is hitting the P&L a little bit faster than we would have expected. So this quarter was an absolute disaster. Put up earnings of 99 cents versus the street at 159. We said forward revenue weakness was where we had conviction here. The revenue missed significantly, so it was 417 versus 446. The street expectation was revenue was down 12% versus being plus 1% this past quarter, and they guided down the full year by 20%. So then here's where it gets interesting. The company did $100 million in repo at around $100 per share this quarter. They just guided down the full year by 20%. It's trading at $65 in the pre-market. This company has $16 million in cash and $750 million in debt, and they bought back $100 million in stock in the quarter at $100. Like, that just says, one, they have no idea what's going on with their business, because they'd be complete morons to do $100 million in the repo before you have to guide down like that, right? Like, this buyback just put bankruptcy on the table. Like, if things could keep getting worse, this could go to zero, and they would have liked to have had that $100 million sitting on the balance sheet in the back half of the year. I can guarantee that. So, we said 40 to 50 is sort of a fair value, but this leverage flip, I think, puts the downside, greater than that, maybe more like 20 to 30 bucks. I haven't even actually worked through all the math of the model yet, but quick take would be, somewhere in that ballpark, with, an absolute worst case being a zero if things keep getting worse, especially as we'll talk about later today on the retail themes call, right? This segment of the consumer, the sort of low to mid income consumer that, buys a lot of the Helen of Troy products is not getting better, right? So, and we haven't even seen the impact of freight costs really yet on their P&L. So Helen of Troy down a lot today, and it is going to go down more.
Again, you should be net short leverage. So a company that just got more leverage in you net short levered companies in quad 3, small cap, mid cap, net short the sector style. No matter what McGough, McLean, Ariana, Willie says about a stock, have more shorts on than you have longs. Okay. I'm not going to say this every day, but I want to make sure that people, I'm going to be very clear, when, especially after we make a mistake, there's an opportunity there to learn.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.